Yeah. Surprise, a little different than you're used to. Dropping these bars on YouTube, knowledge I introduce you. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. All right, good afternoon, folks. Wrong screen. Let's go full screen. Good afternoon. Wanted to do a really quick update. There was a warning from the Bank of England yesterday, and it is in line with what we've been talking about here on the channel now. It feels like for the past 2 months, really, interest rate rises. And, you know, I make these videos not to scare you, but to help you prepare. And so I just want to run through the article very quickly, give you some thoughts. I'm not going to do a Q&A session on this live because I've got to head out. I've got to go to a meeting in Birmingham shortly for some filming. This is going to be a very brief one, and I'm going to give you a few thoughts around what to do. I do have a poll. In the community right now. Answer that question for me. How confident are you feeling with your ability to be able to deal with rate rises financially? I'd love to know how this turns out, just to get a kind of sense of how people are feeling. But just as a couple of things to start off with. First and foremost, we are 10 away from 800, so 41,800. So if we can achieve that on this live, that will be amazing. And if you do get value from this, please don't forget to smash the like button. It takes a second, but it allows other people to be shown this video, at least in the thumbnails from the YouTube algorithm. That will be a massive help. All right, so let's just get straight into it right here. This is the warning from the Bank of England. So nearly a million mortgage holders around the country will see their monthly repayments jump by £500 or more by the end of 2022, the Bank of England has warned. Now, this won't necessarily be news to a lot of us. We have been tracking this over the past 2 months, and it has been a topic of conversation to say that this is going to be happening. I think that the fact that this is coming out in the news right now is quite an important one, because they are publicly signposting what is going to happen. Now, look, I've shared the fact that with my mortgage, I'm coming off a 1.49 fixed rate in October this year. I recently, about 3 weeks ago, was able to get locked into a 4.75. I mean, my mortgage is going to be going up by about £200 a month. And my mortgage is relatively small. I've got a 43% loan to value or something like that. And I'm paying a chunk off it as well. So for many people, if you have a large mortgage over if you start hitting the £200,000 mark, that's where you're going to start seeing, you know, this £500 a month potentially start to kick in, especially if you're coming off a 1 or a 2% fixed rate. The live I did on Tuesday basically just spoke about the fact that, you know, the average 2-year fixed rate right now is 6.6%, and we're at a 15-year high, really. I mean, this article right here says that, you know, the only time that it's ever been higher was in August 2008, when it stood at 6.94. We're not too far off that right now. And so I think it's really important to pay attention to the news right now, just in terms of being able to read between the lines. There is one thing that I do want to kind of highlight in this video, though, and that is something that I've spotted down here, specifically this paragraph. So it is said it would take a further 3% point increase, so a 3% interest rate increase, for interest rates, for the burden to exceed the peak that we had in 2008. That's just in terms of people being able to afford the mortgage. I would question that, to be honest, because it's by a house by household case. But this is the real thing. Markets are currently expecting another 1.5 percentage point rate increases. So when they say the markets, these will be the guys in London who are monitoring the investment markets, monitoring interest rates. They think that we're going to see a 1.5% interest rate hike really by the end of this year, which will take us to what we at the moment. We're at 5% right now. I believe we are right now. Let me just confirm that, just to make sure I am right and I'm not making that up. Let's have a look at what our forecasts are. I'll bring this up on the screen as well for you, so you can also see this. Where are we right now? UK. Yeah, so our interest rate currently, where's our interest rate? What are we doing? Interest rates. Yeah, here we go. 5% currently. So this is where we are right now. So another 1.5% interest rate highs is going to take us up to 6.5%. It's pretty scary when you think about it, which is why I'm asking this question in the poll. How confident are you feeling about being able to cope with these interest rate hikes um, moving forward? Because 6.5%, we wouldn't have been there for a very, very long time when we look at the interest rate curve. And when we click into this, we'll be able to go back and actually have a look and see, when was the last time we actually had 6%, rate hike. I mean, you've got to go all the way back to what, 2009 you're looking at here, since interest rates are approaching this area. But a 6.5% will take us just beyond there. And you have to go all the way back to what's this? 1999, the 1990s, since we've been at this level. So it's going to be a big shock to the system. I think what's very, very different with where the world was in the 1990s and where we are right now is a couple of things. House prices are so much more of a multiple of people's household incomes. So in terms of deposits, that's extremely difficult. And when you think about the fact that our utilization of debt in the modern time is huge in comparison to where it was in the 1990s. Debt has been extremely easy to access. And so in inflationary times, where you're seeing food prices in food inflation at 19% or so, you're seeing interest rates rise. It's that combined pressure of debt, increase in prices, so on and so forth, that is really going to put the squeeze on people. Good news today, Rishi Sunak has agreed to give a 6% pay rise to public sector workers, despite the fact that this is going to be inflationary. Has he done the right thing? That's not for me to say. I mean, my partner is a teacher, so she will definitely welcome a 6% pay rise. But what impact that's going to have to interest rates, to inflation, we're just going to have to wait and see, really. I do want to point out one other thing before I actually conclude this live, because this is just going to kind of, really point out a couple of key things and the size of the issue that we're also facing as well. And I did cover this in the live that we did on Tuesday, but let's just have a look at this. So this is something that Andrew Bailey has previously said, and this was this week. Governor Andrew Bailey, so he is the Bank of England governor, said last month there were signs of more persistent underlying inflation pressures after the Bank of England unexpectedly raised its bank rate to 5% in an effort to tame the highest inflation rate among the world's biggest richest economies. Now, I don't think it was unexpected. He was signposting this for a while, but look, if that's how they want to run it, that's completely fine. But it's really important. More persistent underlying inflation pressures. And that's why there were meetings with the bosses of supermarkets to try and cap food prices. And that's the reason why they recently met with the heads of banks to try and get them to pass on these interest rate hikes to savers. But this is the larger problem that we're dealing with here. So trade body UK Finance estimates 800,000 Britons will need to refinance their loans in the second half of this year. That's 2023. And a further 1.6 million in 2024 of a total of nearly 7 million fixed rate mortgages that are outstanding. And if you come back to the article that we're talking about this morning, this is the warning that came out yesterday. They're estimating up to 2026. And so look, I'm going to say what I've said for the last 2 months. Please, 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 please be proactive. Don't procrastinate, and don't second guess the situation. I'm still speaking to people who think that rates are going to come down. People will tell you not to pay attention to the news, and to a certain extent, you need to have the ability to discern and read between the lines when you're following the news. That is an adult skill, and I think as adults, most of us will be very acutely aware and able to be able to sift through the BS. In this instance, it is being reiterated a number of times now, that interest rates are going to continue to go up. So if you're thinking interest rates are going to come down, look, I don't know what to tell you. Please, please, please just do further reading. I can't tell you to go fix. Just make sure that you're comfortable in the decision that you make. Because I personally do not see rates coming down, I think we've got a really rough 12 to 18 months ahead. 2 years from now, maybe interest rates may be down, but for the foreseeable immediate future, 12 to 18 months, depending what happens with inflation, I think we're going to be in this high interest rate. And, look, the whole point of this is to try and cushion yourself and prepare yourself for financial shocks. And this is going to be a significant financial shocks to mortgage holders and to renters. And so, because oftentimes that is your largest monthly expense, anything you can do right now, and I know for renters this becomes so much more difficult because you've got to speak to your landlord, and really you've got to try and negotiate as much as possible. And sometimes you might be in with a landlord that doesn't have the ability to be able to negotiate with you to make this more affordable, and that makes the situation even worse because now you've got to look at your options. And in a market where mortgage prices are all going up and rents are all going up, that squeeze for you becomes even more difficult to deal with. For mortgage holders, I wouldn't say it's easier, but at least you have some semblance of control by fixing. Remember, you have 6 months before your fixed rate ends to negotiate a new deal. All right, not 3 months, 6 months. So when you start getting the notifications through that your mortgage is going to end in, say, where are we right now, July, something like January 2024, you can start negotiating right now or from next month. So don't wait, be proactive, be decisive. The last thing you want is to sit in your hands, and then unfortunately when you get to the point where your deal runs out, and let's say you're busy, you forget, you go onto a standard variable rate. Standard variable rates right now are 7.99%. That's the lowest that I've seen. You think fixed rates at 6.66 are expensive. Standard variable rates are so much more expensive. So please be proactive. That's all I'm going to say. Let's have a look at the results of these polls, because I would love to see what everyone is saying here. What does everyone say? What's the verdict here? All right, so 51% of people are saying not too confident, and 48% of people are saying confident. I thought it might be a little bit closer, but the majority of people saying not too confident is not a surprise to me because there is so much uncertainty right now. Look, there's a lot of content here on the channel to help you in terms of budgeting and structuring and all that kind of stuff. Look, if you need help, reach out, send me a message, email me. My website's actually being revamped. It will be fresh next week. I know that people ask me, do I work one-on-one, that kind of stuff? Yes, I do. I haven't really made that information as clear as possible. So as of next week, that will be more clear. And what I'm thinking of doing is actually running some kind of financial surgery. It will be an online event away from YouTube where I'll be able to offer some practical help around mortgages, restructuring, looking at everything that you have. So it might be, okay, what do you dial down? Do you dial down payments into a pension? I was speaking with Pension Bee last night. People ask this question: should I pay less into my pension so I can get more money in my pay packet to compensate for this? I'll go through a ton of those options as well, to hopefully give you some ideas of how you can make your money go a little bit further and structure your finances in a way that will hopefully work for you. I haven't yet concluded when that is going to be. Once I know and once it's all organized, I will let you guys know here on the channel. But thank you so much for watching this. We have 62 people watching right now. Likes are at 19. If we can get that up to about 30, that would be absolutely amazing. The reason why that's important is because the YouTube algorithm will simply look at this and think, did people enjoy the conversation? And the biggest indication that they use for that are watch time. Did you stay to the end? And also likes. I know it's stupid, but it takes 1 second for you to click that like button, but it helps massively. It means that other people who may be in your position who would like to learn a little bit more about what's going on or need to hear some of this stuff will also get recommended this video by the YouTube algorithm. But anyway, thank you so much for joining me. I do have to run. I will probably do a much lengthier session, maybe tomorrow evening at some point. So if you haven't already subscribed and hit that notification bell, please do that. You'll get notified when I schedule the next live tomorrow. And on Sunday, the plan is to run another finance clinic so you can come along and ask some questions. But I appreciate every single one of you. Thank you so much. I will catch you later on.
Surprise, a little different than you used to. Dropping these bars on YouTube, knowledge I introduce you. We chasing this money like it's the prize, it's the voodoo. Fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. We got the traders, got the picture with the Bentley in Dubai. Are you dripping in designer looking fly? On the bombardier, sipping on the wine. Broke man, we broke. Where's the fun in being broke? Stocks and bonds get you yo. That's what I'm teaching these folks. I see that smoke, see them choke. Getting coke. While I'm researching these stocks, buying coke. 20 months on the channel, million people taking note. I got a warrant for Buffet. I'm coming for his vote.